Larry McDonald. Larry, good to see you. Thank you so much for being here.
Hi, Maria.
I love what you write
Thanks,
in your
great to see you.
report. The wish list, the Chinese word for crisis, is often understood as encompassing both danger and opportunity. That word is weiji. Are we in a crisis or in an opportunity?
Well, at the lows there, we were like, what I try to do and what David Tepper taught me in our new book, How to Listen When Markets Speak, is you want to have a wish list of great companies that are in the middle of a new secular boom. So what we did was we looked at the infrastructure for artificial intelligence. This is like a month ago. And we were like, okay, these are the names we want to buy when they go on sale. And sure enough, crisis met opportunity 3 weeks ago.
That is terrific. But after all of that hysteria, when the market was down 2,000 points, here we are back where we started. If we didn't do anything, we would be just fine.
Right. But, the market, the beast in the market, there's a serpent in there always. And the serpent inside the market is going to get very frustrated with the fog. In other words, the Trump team did a great job of coming up with some really good, what I call fire hoses, where they gave people hope on these deals. But at the end of the day, there's not a lot of beef in there, right? And this is really a preliminary meeting with China. And the UK deal, it's just not a big part of global GDP. So I think, the next couple of weeks, we're up against, even more uncertainty because the beast inside the market is not going to be happy with the real meat. There's no meat on the bone yet.
Okay. So you don't see meat on the bone when it comes to fundamentals, when it comes to these trade deals, or when it comes to what? The markets. Tell me where there's no meat on the bone, because we've had an 18% rally in the S&P 500 in 18 trading days.
Right. And that's incredible. But remember, a lot of that is short covering. And that short covering created momentum. But if you look at the hard data versus the soft data, and all that means is, Wall Street mumbo jumbo, but the soft data are surveys from big executives, CFOs, big decision makers. The soft data is the worst in probably literally going back to COVID or Lehman. That's how bad the soft data is. And that's survey data. Hard data is like real jobs and things like that, real economic data. So the spread between those two is at record levels. In order to get the hard data to not mean revert down to the soft, in other words, that ugly soft data, you need visibility. You can't have fog. And right now, we just don't have enough visibility in terms of what these tariffs are actually going to do, what the policy is in order to. So right now, I think this is the largest tax increase since the 1960s. And I agree with, some of the people like Paul Tudor Jones. We're probably going to retest the lows here. You want to be light, use this rally to lighten and get that dry powder just like Buffett has, and then be there when we get the real big sell-off that you can put some money to work.
Okay, so are you expecting a recession this year? And how are you allocating capital in this uncertainty where we need clarity, as you say? Because you say you want to be light here. What does that mean? Am I shorting the market? Am I hiding in certain sectors? How are you allocating capital?
Well, what we do is we work with institutional investors all over the world. We come up with a model portfolio. And based on the intelligence gathering that we're getting, I think the smart money is selling this rally, raising cash, and you want to prepare yourself for a retest of the lows. Because at the end of the day, stocks are still very, very expensive. We're trading potentially near 22, 25 times earnings, depending on who you believe. And we just don't have enough visibility from Washington yet. And at the end of the day, the Biden team handed Trump a huge deficit. They're trying to raise revenue through consumption taxes and income taxes. The Biden deficit was just off the charts, literally in the first quarter of this year, which was the Biden quarter, $800 billion in one quarter. And that's what Trump is up against. And now we got to get the reconciliation bill in Washington. This is really important for your viewers. That reconciliation bill, the House and Senate version have to be merged. And what Trump is trying to do, and I think the Trump team's doing a great job of trying to create enough tax revenue to appease that Freedom Caucus and get these two bills merged. If they don't get them merged by, say, mid-June, we're going to have a huge crisis on the debt ceiling, and that's what they're trying to prevent.
Yeah, for sure. Well, they've got to raise the debt ceiling, $5 trillion. Larry, it's great to talk with you about all of this. Thanks so much.